takeover battle for Canada's TMX Group is one of the longest-running stories in the world of big mergers and acquisitions right now. First, as you may remember, the London Stock Exchange made a $3 billion offer, but that was trumped by a group of Canadian banks and pension funds who are willing to pay as much, some say, as $3.9 billion. And today we're expecting an update from that so-called Maple Group. That inevitably will make some news, but we're going to try and make some news of our own with the CEO of the TMX Group, Kloet. Tom, good to see you this morning on the Inside Track. I'd like to begin with this question. Are you or aren't you trying to sell this company?
Well, we're actually trying to operate the company right now. We've had a great first couple of quarters. Obviously, we're interested in looking at things that help progress our business plan and continue to develop our strategic activities. So we are looking at strategic partners, but frankly, the key focus we've had is on operating the company. Well, a lot of people are interested in us, which isn't a surprise because we're performing well and the Canadian economy is performing well.
When you say a lot, what does that mean exactly? We know that the Maple Group is interested. Are there other interested parties?
Well, as you know, as you referenced, we had a merger of equals conversation with LSE that we took to a shareholder vote. Before that, we had a conversation with another party that we disclosed in our prospectus. And frankly, there are other business arrangements that we look at with other exchanges and other organizations around the world.
People know that you were disappointed when you've said so as much, right? Sure. When the LSE deal fell apart. How do they know, or how should they know? Should they believe that you're negotiating with the Maple Group in good faith? They look, I don't need to remind you how the world of merger arbitrage looks. There is a $10 spread right now between what the Maple Group has put on the table, $50, and the price at which your stock is trading. The market is saying effectively this deal isn't going to get done, certainly not at that price. Is the market wrong?
Well, let's remember first that this was an unsolicited offer, and since the LSE Group deal conversations terminated, we have been negotiating and discussing the arrangement with Maple Group. There's a great deal of regulatory uncertainty with respect to any of these types of acquisitions. Look at what happened with the Australia SGX
the
combination.
Australia combination.
And look at everything Deutsche Börse and New York Stock Exchange are going through. These combinations do take some time. We are highly regulated organizations. And in this case, there's a Competition Bureau issue as well. Now, we happen to think that
antitrust, effectively, right?
Antitrust would be the equivalent in the U.S. Now, we happen to think there's good arguments, particularly for bringing the Securities Clearinghouse, which is part of the proposal, into TMX Group. So we're obviously very interested in that. But these are complex things, and I think what the market's pricing in is execution uncertainty more than anything else.
Rationally?
Well, I'm not going to comment on my own company's stock and say whether it's priced rationally or not, Eric. But what I do think is that anytime there are these kinds of combinations, there is a certain amount of regulatory uncertainty.
Now, the other uncertainty, shall we say, out there is this notion that the Maple bid was a bluff to scare off the LSE. Is there anything to that?
Well, I don't think so. I mean, we've had conversations with the Maple Group. These are serious business people. I don't view it as a bluff, frankly. I think, from my own personal view, I think they've continued to extend their offer. You indicated they may say something today, but they've extended the offer at least once. They understand the regulatory filings required. I don't see it that way, frankly.
I have one last question I want to throw at you, Tom.
Sure.
You talked about the importance of operating your business. Clearly, that is an issue for shareholders, too. Sinoforest, an unbelievable black eye for John Paulson and a number of other investors. It trades on the Toronto Stock Exchange. Black eye for you guys?
I don't think so, Eric. No more than say Enron was for the exchange it was listed on. These events happen. We still haven't seen the actual report from the independent committee, so I don't want to prejudge that. But with respect to our listing standards, they're very robust. We take companies through a great deal of detail before we put them on our exchange. Are you raising those standards
as a result of what happened with Sinoforest?
Well, I think all stock exchanges have to rely on a set of advisors that the company has, whether it's the accountants, whether it's the lawyers that bring them to market, whether it's the investment bankers. We don't do an independent audit of the companies ourselves. That's not what a stock exchange is all about. We're about setting listing standards and making sure people comply with those listing standards.
Tom, good to see you on the Inside Track this morning. Thank you for coming. Tom Kloet, the CEO of the TMX Group. It is the company that operates the Toronto Stock Exchange, the subject of a takeover offer for almost $4 billion.